So we have the one and only Mr. Greg Dickerson back. He was with us for 3 or 4 years in a row every week, and I missed our opportunities to have conversations. How you doing, Greg?
Doing great, Michael. Good to see you. Thanks for having me back.
Yeah, I wanted to ask you a question about Tesla. And I want to talk about this as a business owner, because that is your background, right? You are an entrepreneur, you are a business owner. So I want to summarize my understanding where Tesla is today. I want you to poke holes at it. I want you to tell me what I'm missing. And I want to be very clear. I will never, ever, 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 ever own the stock, because I think it's just too polarizing and there's easier opportunities. But it's an intellectual exercise I want to play with you. You ready?
Let's do it.
So Tesla as a car company has very fat margins. They're somewhere between 16 and 20% today, where the average car company is low single digits. In the last week or so, Tesla has announced somewhere between 10 and 20% price cuts, right, to their asking price. This allows them to lower the price point where their buyers can get government tax credits of $7,500. So in my mind, Tesla is using they're eating some margin, so they're still positive. It's just less positive. They're going to increase demand because their buyers have a lower price and the tax credit from the government. So is this a 3D chess move where Elon Musk and the Tesla executives are being aggressive in continuing to dominate where other EV players can't because they don't have the margin? Or is this a sign that Tesla is no longer the only game in town? They have more competition and they actually have a demand problem. I don't know where it falls, and maybe it's both. I don't know, but I just had to ask somebody else, and you are a business owner. So what do you see
door
going on?
number three,
Yeah.
Elon has alienated some people with his, recent moves and political,
Yeah, he has.
viewpoint, talking points and philosophies and things like that. So he's alienating the very people that he appealed to in the first place. So that's door number C. Door number B, is he, trying to price other people out of the market or gain more market share by lowering price because he can? Sure. Because there's other companies entering, that industry now, entering the space. So he is no longer, he doesn't have a moat around him anymore. He's no longer a monopoly. I mean, at one
No
point,
longer the only game in town. Yeah.
Pretty much. If you wanted a non-Prius EV, you had to go to Tesla. So now everybody's in the game, and there's some really great competition out there. I mean, every day somebody's releasing a new EV. There's one coming out of, I think it was a Vietnam or something like that. Really, really nice, car company. There's, Dodge is making, released an electric truck that looks like smoking hot. I mean, there's all these new, everybody's getting into it now. So he's going to lose more and more market share as these other companies come up. And, so door number one was, is this something that was, forced on them, or is it, positioning?
Yeah.
That's one and two, I guess. But
it's basically it's really for me, because again, like anytime you talk about Tesla, you're going to get hate, and that's why I'll never touch the stock. I think any stock that's polarizing, I don't want to play with. I think stocks should be about PE, should be about like Tesla could be a great company and a crappy stock.
And but let's qualify that. So
sure.
It's, there's a cult and there's a meme factor to it. And it had a great return from the bottom of 2020. It was the best performing asset from the bottom of 2020. It beat Bitcoin, not some altcoins. There were some altcoins that way outperformed it, but the large cap alts, Bitcoin, and most, every stock, Tesla was the number one, unless I'm missing something. But I think from what I have seen, it was the best performer, 3,000% or something crazy. So it's just a stock. It's a company that has a value, that produces products that there's demand for. So it's a stock. So who cares? All that noise is noise. So if Tesla goes down to $20 and then there's a chance for it to go back where it came from, why wouldn't you want to get in on that play? Same thing with AMC, same thing with Bed Bath & Beyond and GameStop. And, we're in a very, prolific, polarizing world of social media. So you can't think in terms of your investment thesis or your investment strategy, based on what is going on somewhere off to the side, and everything was overvalued. Everything.
Yeah.
Everything was
Yeah.
overvalued, overpriced, because there was $2 trillion worth of liquidity pumped in the markets over the last 2-3 years. And the interest rates were at, record low levels, just like real estate. Real estate has gone through the roof. We can talk about that in another episode. So what's happening? And we talked about it 2 years ago when this all started, and you and I were forecasting these things with the Fed, changing and interest rates getting, as low as they were and inflation going as high as it was. Before inflation was even a thing, you and I were screaming from the rooftops that there is a great repricing coming. You remember those videos? You can go back. I've got some on my channel, your channel, where we called it the great repricing. And that's what we're doing. We're just repricing based on liquidity, because it's all about liquidity. No matter what it is, financial markets, vehicles, real estate, it's all based on liquidity. What's the availability of the liquidity, and what is the cost of that liquidity? So for Tesla, the other factor is, the things you can get the credit is number one. Number two, interest rates are so high financing a car, they had to do something to make it, because people weren't buying. So it's,
I think I think there's one other variable there that I think is uniquely hurting Tesla today that frankly helped them for years. And that is, if you look at the average Tesla buyer, it's a white collar male tech worker. I believe, and have called us heading into a white collar recession. We're already seeing tech layoffs. Tech, generally speaking, leans Democratic versus Republican. You highlighted it earlier. Elon has had some interesting tweets that alienates one of those sides. And it seems like everything that was working for Tesla for 2 years is now not working. It seems how the current has changed.
Kind of like Facebook, becoming Meta. So, I mean, that's what happens. And, Elon, he's the richest man in the world. He didn't care. He can do what he wants. And, but it's really funny when you see, liberal columnists come out and say, driving this car makes me feel embarrassed for who I am. I don't think I can do it anymore. And, that's out there in the mainstream.
It is. Now. I've seen it. I've seen people that have just nasty cancellations. Like Tesla asked, why'd you cancel your order? Somebody said, because Elon Musk is a blah, 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 blah. I'm like, whoa.
Yeah.
Wow.
That's tax credits, affordability, market share is being threatened. And, and it's going to continue. So what happens? Competition brings efficiencies and brings prices down. So you need that, right? He was the only game in town for a long time.
He was.
At that level. And, great car, great technology. The batteries are what really needs to change in the industry. That's the biggest, Achilles heel of the industry is the batteries. So once the technology of how do you power an EV sustainably and not have to stop every so often and charge for 30 minutes or an hour, that will get more efficient. Technology, disruptive innovation gets more efficient over time. So you have to look down the road and see who's entering the market, who the players are, what their first mover advantages are. And Tesla had the first mover advantage that's now going away, as did Facebook. But, they took their eye off the ball with this whole Meta thing. They never should have changed the name. They never should have done that. That's an investment. You work on that.
Should have spun off another company. Should have been its own thing. Right.
Exactly. He didn't change Instagram. He didn't change Facebook to Instagram. You know what I mean? So, so anyways, that's how I look at it. I don't get caught up in the themes and the memes and the cults and all that. I'm a businessman, right? There's an opportunity.
No, exactly.
So you buy low, you sell high, and you could argue real estate's even more like emotional. People get more emotional and irrationally exuberant over real estate than they do like stocks. So it's just that what's happened is, and where a lot of that's coming from, is that the gamification during the 2020 with Robinhood and all these other things and the meme stock craze, you've got a younger demographic coming in, and they've never seen or been through any economic cycles.
Right.
All they know is up only. All they know is, hey, Tesla's a great.
They know a V-shaped recovery. They know a recession lasts like 4 minutes.
V-shaped recoveries. And, to their credit and to our credit, prior to 2009, that's all we saw either until 2009 happened, and then we learned a big lesson. Things don't always go up forever. And I thought they would. I'm like, they ain't making no more real estate. It only has one way to go.
Only goes one way. Yeah.
Over the history of time, everything has gone one way. And as these markets correct, they will continue to go up. But, they have to correct. They need to spend some time. And that's the problem, is you can spend some time. You can spend years in the valley, before you really start, going up. So you got to take some profits and you got to, buy and sell. But, as far as Tesla goes, I think, they've obviously lost a lot of market share. They're going to continue to losing more market share, and they need to really innovate, So what I would challenge Elon with and Tesla is, you were the first movers, you were the innovators. Now you need to innovate on the charging and the powering of that technology. You need to be the first mover there, and you will get all your market share back. If you can eliminate a battery and eliminate having to charge and all that kind of stuff and still be an EV somehow, or some other alternative source of power, which people are exploring that's what they need to be coming out with next. And, moving to the next level to really lead innovation in the space. But I think they've maxed out on that.
Yeah. And the other thing I look about again is I put my accounting hat on, right? A lot of people talk about income statements and balance sheet. I actually going to be looking at Tesla's cash flow statement, because again, one of the things they're doing by taking this big price cut is they're going to be hurting their cash flow. And oh, by the way, there's rumors that they're going to be investing in more plants. That is a potentially very bad cash flow dynamic, right? A lot of cash flow going out for new plants, less cash flow coming in from unit sales. They may need to raise more debt or do bond offering or something, because that could become a problem, right?
Yeah, analysts are going to start looking at all those things, and the stock's going to continue to reprice. I mean, some people put it at 20, 25 bucks is where the fair value is, because it's been priced as a tech play.
And now it's a car company. Yeah.
Right. And so what's interesting about that whole thing is that as vehicles and manufacturers enter the EV space, one strategy could be, hey, let's drop the price, for entry level to get them in, and then let's charge them for longer battery life, for, this, that, and the other, for extra technology, expanded capacity, whatever. And they're already starting to do that. Some companies are already starting to charge you for more horsepower and, things like that. That they can remotely control with these electronic vehicles and get you on these subscriptions. So I think you're going to see more and more of that. That one company that I talked about from Vietnam, that's where it is. It's a Vietnam electric car company. Really, I mean, they have a great looking product. They have a battery subscription. So the most expensive component of an EV is the battery. And they don't last right now. They don't last forever. You have to replace them every so many years. So they put you on a subscription plan, so you never have to worry about it. No maintenance, no replacement, none of that.
Interesting.
Yeah, you just take it in. Another thing that's interesting is some car companies are experimenting with swapping stations. So when your battery runs out, you just pull in, swap it out, and take off.
An oil change.
Sit there and charge it. So that's where the real innovation in that space is going to be. Not the vehicle itself. I mean, there's a lot of that too. But the powering mechanism to eliminate the need to have to stop at a charging station or even worry about a battery going bad on you at some point. That's where the innovation is going to be.
Very, very cool. Well, thank you for having this conversation. I knew you'd have unique insights as a business owner, as an entrepreneur. Where can people find you if they want to follow you?
Yeah, GregDickerson.com. That's where all my info lives. Go check it out.
Thank you so much.